Yeah, so starting on the daily chart, we're going to try to make this a really quick one. So previous video told you to go to your weekly chart, which that'll be for you to look back to, and you'll see the last down close candle before that large up move. Uh, right here is going to be that weekly order block mean threshold, and then the first quadrant, and then of course the center line here is the mean threshold of the daily bullish order block here. Fair value gap on the daily chart, consolidate above, hit consequent encroachment essentially. And then right here, you can't tell, but we drop down, but we don't quite take out the low of this candle. So we do leave relatively equal lows here. Pretty much still consolidating all in this range. But as you can see, we do stay above main threshold of this daily bullish order block. And we've just been essentially consolidating all on top of it. Still haven't closed below. So as of right now, still want to see price go up until I see this wick consequent encroachment of that or the midpoint, which is essentially the same as the first quadrant of the weekly order block. Until I see that broken and the daily order block, I have to see price close below here and close below here. Then I would move to think of price going lower, taking up sell side here, balancing this gap, and then going further into these volume imbalances here and then here. All right, so now to the 1 hour chart, you see daily mean threshold order block, and then of course we have above, we have that first quadrant, which isn't marked here, and then below we have that weekly order block mean threshold. So we already covered this trading previously through CPI, everything earlier this week. This is the price action from the day. You see we move up into this fair value gap with the low of this candle, the high of that candle. That space in between is a fair value gap, more specifically sell side imbalance, buy side inefficiency. It's lacking in buy side delivery to make this efficient price. So today you have the run up and then that fair value gap. Also, you can look at this mitigation block in here. So this area all in here is what you want to look at for the price to go down lower. All right. Ooh, that's so fast. So right on the 1 hour chart, this range here from this low to this high, that is all one consecutive bearish order block. Okay, why is it a bearish order block? For one, we are trading into this 1 hour SIBI or bearish fair value gap. All right, we trade into it and then we just fall lower. Let's go down to the 15-minute, but before that, one thing, so with order blocks and fair value gaps, if you don't already know, you want to break them down into quadrants essentially. And I kind of trade the fair value gaps, especially like this, on a scale. So I'll start at how price acts around the first quadrant or 25% level. And then of course for me, the 25%, and the 50% or consequent encroachment, those are going to be the two most important levels to me. And then of course in the previous video, I did mention about this area here being a potential bearish breaker. Of course, you see we don't trade too far into it, but we do see the high of this candle. It does just tap the wick of that last down close there. But as you can see, we consolidate under the first quadrant and then eventually look back in your price action and you want to look at the first quadrant, which is 497.75, and then the close of this up close candle, which you can see we form a fair value gap here. We trade up into that order block. Why is this an order block? Because it forms a fair value gap. All right, that's just a quick, bare bones, explanation of it. We trade up into it, can't get up, we break down, and then again, we come up, and here, and let's drop down to the 15-minute. So on the 15-minute, this is that area that was shaded in red, where those are those consecutive up close candles. When you are looking at price action like this, and you see that 1 hour fair value gap form. That range from the low to the high, you want to be looking, if you're going short in that area after that order block is formed, which is this red shaded box, you're looking for fair value gaps in that area to go short on. Light bulb. That is one of the simplest things to do to have a high probability trade. So we already know that we're bearish. We consolidate on here. We trade back up into it. But rebalance this entire fair value gap, this SIBI, and then ultimately, of course, as you see, we break lower. But before then, what I also want you to see is this yellow line here, light yellow hue. Like I said previously, power 3, we are looking for the midnight opening price. From there, we want to see price go higher to go lower. So just like if you were to look at on a daily candle where you see an opening price here, say opening price is here, or we would want to see price go up, make some kind of a high, trade into some kind of inefficiency, take out some kind of buy side liquidity, and then we'd want to see it come back down, and then trade to wherever, and then eventually we will have some kind of retracement up. That's what you'll see on the daily candle, and that is power 3, what you want to see. So here, after midnight into London, we trade up into this inefficiency. We consolidate a little bit. We break inside of this shaded area, which is the bearish order block. You have, we have, of course, the obvious on the 15-minute chart. We have a fair value gap from here. She bangs it 1-2 times. And then also, it's hard to see, but also you have a little fair value gap from the separation of this low to essentially the high of that candle. You have a little separation in there that we trade into. And in addition to that, we do have an inversion fair value gap here from the high of this candle to the low of that candle. Extend that across. You can see how price is respected in there. It acts as strong resistance when we break lower. All right, now to the 5-minute chart. So we aren't going to drop down to the 1-minute chart. I think this is enough for you to see just from these time frames, and this is just a quick video. But again, this is that 1 hour order block. This is that shaded area, and the yellow line being midnight open. So we rally again. Anytime you're going short, when we trade like that on the 1 hour, you are looking for fair value gaps in this area here. Okay, so again, you have one fair value gap here that you could go short into, and then again at 9:35, I believe it is 9:35, we trade up into this fair value gap. We take out the liquidity here, trade essentially into the high end, and just essentially balance this entire bearish fair value gap out, and then we just drop lower. Okay, so we drop lower, we trade up higher. Notice candles closing, consolidating around the midpoint or consequent encroachment of this fair value gap before it breaks down lower. Kind of a slow, not really a low resistance liquidity run like this was, but we do eventually break higher into the 130 hour. We rally up, we take out liquidity here, buy stops here. We don't quite get up into here, but we do trade back into this fair value gap here before we fall back down lower. Of course, immediate target, these two lows here, that is your sell side liquidity. Those are your essential relatively equal lows. Target would be that going into the 2 o'clock, 3 o'clock silver bullet, which we'll cover later on, but essentially between 2 and 3 o'clock, using that 130 low. You're looking for swing lows, swing highs to form at 130. Essentially in this area, we have our swing low here, and then we rally, and then we come back, take out the liquidity from essentially the lunch session. That is essentially near the end of lunch, which you can look at from 12 o'clock p.m. to 1:30 p.m. Okay, so that's that 130 low. We come up and we come down and take it out, trade into the daily mean threshold of the bullish order block. Right, then we come back up and trade into this fair value gap order block. Okay, and then we just kind of slowly drop back down. So that is essentially the main things I want to point out. This isn't going to be a deep dive. Um, just a quick market review, little things for you to look at. One thing, definitely go back, listen to it. Definitely 1 hour chart when you see these ranges. That is where you want to find your order blocks at after, you see some kind of a market shift, meaning here you have this swing low is taken right here. That's out of your 2022 model. That's a market structure shift, displacement, and we have this fair value gap form that we trade back into and after the 9:30 opening bell. And then, of course, due to swing, expect for that first initial move to be the fake out. They come up, and then we just come back down. All right, so I'll go back to the daily chart. So, like I said, midpoint, consequent encroachment of this wick. I don't want to see that taken, or mean threshold of this order block. I don't want to see that taken. So if this gets taken, then going into next week or, Friday trading, depending on if we just jump out the door, we do have a new day opening gap here forming Asia. But main thing is I want to see mean threshold still act as strong support here, like accumulation. And I want to see the consequent encroachment of this wick hold up. Okay. If either of these two are broken, okay, then I'm looking for sell side here. And if we really animate it and we get a close below mean threshold of this daily fair value gap, being a busy, a buy side imbalance, sell side inefficiency, saying that we need sell side delivery to make this efficient price action. Okay. So until I see these daily levels taken, I am still bullish. And we do have this volume imbalance, sell side liquidity here, but we are, at least for me, I am bullish. Granted, these past 2 days haven't quite been bullish, and I could definitely be wrong, but I just like how price remains to close above these order block levels and that bounce off of the weekly level that I told you about on, I believe that was Sunday. So I think that is it. Not much else that I really want to mention. We do have relative equal lows here, so that is sell side. If we do want to come back down, take out sell side here, got sell side here, we can come down into this green shaded area. That's your daily fair value gap. That being consequent encroachment. If we trade down there, or I would honestly like to see us stay above it, even this wick here. This new day opening gap that's formed being where we closed at the end of trading session essentially yesterday, all of it still today, and where we opened at 6 o'clock. That gap from where we are lower from the closing price in the New York session, that's your gap, your new day opening gap, right? So that's it. Trade review of the week will be on Sunday. Till then, talk to you guys later. Bye.